Wednesday, February 8th, market analysis, Stan Ehrlich. Good morning, 10:37 California time. We got 2.5 hours before the market closes today. So far, we've seen some weakness, not particularly severe, not that big a deal. We're down at the moment 3.5 points on the spider. I always start out with the S&P 500 SPY and touch on the DIA and the QQQs and very often the Russell 2000. I'm going to do something a little bit differently this morning. I'm going to talk about the NASDAQ futures, the QQQ futures contract, NQ, in a minute. So we're in the lower third of the range of the day so far on my right-hand chart. The left-hand chart, I'm expanding, shows you a 1-minute real-time chart. And today we started out gapping down a little bit, a point or two, came back up, couldn't hold the rally, made new lows, and that was a couple of hours ago. So far, we've seen higher highs and higher lows for a couple of hours. Now, that's an awfully small amount of time, obviously, but that's how things begin. But you've got to have more evidence. So very soon before the close, I expect we're going to see a rally above 412.67, above 413, and hopefully either near the high of today or making higher highs by the close. Yesterday was particularly profound. We had a bullish engulfing back in a support area and right around the lows of the previous day on Monday. So Monday and Tuesday were about the same, with Tuesday being a big bullish engulfing. Now, it would have been bullish buy signal, but we weren't oversold. So I have to have that criteria as well on my custom RSI, which you see on the bottom of most of my charts. This is Wells Wilder's RSI. He taught me RSI personally. I have changed it into something like a bar chart. It's not, but it has a lot more information. Colors change when certain conditions are met, etc., etc. Anyway, and this is available for Ninja traders and TradeStation traders. Now, I like what I see in general. Remember, this is a head and shoulder bottom formation. So far, so good. The minimum upside objective is matching approximately all-time historic highs back in January of 2002, a year ago. So 2022. So if you have any questions, by the way, you can send me an email at info@ersignals.com. I'm trying to be very specific about turning points, and yesterday could very well have been one. I don't mind the market coming back down into approximately the middle of yesterday's range, which is very common. We dropped off a little bit more than that, but the key here is not getting below yesterday's low. That would tell me that we're going to drop down to 405 or 400 area, which is a little bit more of a correction than I see at the moment, but it doesn't kill the major head and shoulder bottom. This big fat green line is the neckline. It got broken classically for a couple of days, tested, and then rebounded to make new highs. Hey, but we got overbought. You realize the overbought condition the last time this happened was like August. So it's not to be taken lightly. I'm not ruling out that we couldn't drop back to 400. I just don't see it in the cards at the moment. We'd have to close below 407.5 in order for me to start talking about that. Right now, not too bad, but you could improve it by the last 10, 20 minutes. We're dropping down a point or something, yeah, about a point. No, okay, now the DIA. Not quite the same story, but most of it's the same. We have a giant head and shoulder bottom. The head is a double bottom by itself in this case. Not only October 13th, which I told you was going to happen. Well, I shouldn't say it that way. Predicted that the October lows might happen again. Pinpointed it on October 13th when they happened. Go listen to my recording on that day or even before and after. So the last shoulder low was like a month earlier than I expected, but and also a little bit higher than I expected, the DIA's neckline slants upward. Excuse me, upward. So we're not even breaking out, not even close at the moment. We're going to have to make new highs since April in order to just get close to the neckline on the DIA, which is now extremely close to a significant resistance area. So when this happens, it's probably going to be a huge up day, rallying above the neckline and blowing through the resistance all at the same time or within maybe 2 days. But there's nothing wrong with this formation. It's just taking a little bit longer to break out. Next chart is the QQQs. And the QQQs have the same situation, except it's been the strongest in the last few months. Well, actually, since December. It came very close to making a new contract new low for the trend for the bear market back in December, but it didn't. It formed a shoulder. You have reversals involved in it. You've got it happening in a significant support area. And boom, we broke the neckline on January 23rd, tested the neckline a couple of days later, just like everybody else, except for the DIA, and have been rallying very strongly, including a big up gap into resistance and, well, through resistance, but an exhaustion gap at the moment. But there's no big move down yet. The overbought condition bothers me, and I have to say the same thing here. If we close below the lows of yesterday or the day before, which were almost identical, then we probably have another few more days down, maybe a week, but not a lot of downside price movement, just zigzagging its way down somewhat. I'm expecting this seems to be a bull market. Bull market climb slower than bear markets crash. So you got to make adjustments for that for this year and maybe more, because I think we're going to be in a long-term bull market, and it started on October 13th, and the last shoulder was late December. Now, one more thing here. Look at this. The ER trading system is built to pick tops and bottoms. It makes mistakes, but they get out. We get out quick. We have a relatively tight stop. We don't lose a lot when we are wrong with our signals. But we have in the NQ, the NASDAQ futures contract, the top of the market back on November 22nd of 21. That was the end of the bull market since COVID and the beginning of this 2022 bear market. We have a sell signal on the high day. You can't get more accurate unless you're inside the day. And frankly, we were. Now, and that's the ER1. We also have the bottom of that bear market to the exact day on October 13th with a bullish engulfing ER buy signal. This is why the system is built. This particular version of the signals bought it the day after the ER signal and could have bought it the day of, but you usually get a better price if you use ER3 the day after, and is still long. We use an extremely slow moving stop, which is still below the low of the initial October 13th low, and will start to move up very soon because of the new highs we've been making for months. That's great. That's an investor entry and the exact low day. Investors don't do that. They have to wait until there's some kind of conviction, long-term trends, 200-day moving average broken, et cetera, et cetera. Okay, now futures contracts. I'm going to start out with those contracts that have something to say about them that I feel is very important and or have a recent signal that's still in progress. We're very oversold on the silver market, which broke out of a sideways trading range to the downside after very accurately testing the top resistance area and failing miserably within 2 days. From an almost overbought condition to oversold in 48 hours. That's something. That's a big move. Now, oversold has stalled the decline, which is typical. We may have a little bit of a bounce more than we have had so far, which is not much, but I'm looking for lower levels, probably down to 2120-ish. Next chart is gold. We did just recently pick the high of the move in gold. We also picked the low of the move in gold on the first of a triple bottom. These two other lows might have been a few ticks lower, but yeah, that's fair to say that that's a low or a bottom. Also that one as well. So although the signals aren't often enough for a lot of scalpers, day traders, stuff like that, we still have the ability to pick turning points of very profound long-term nature, as well as any other time frame you want. Look, if you sell the high day, I mean, you have a profit almost immediately, almost. Next, I'm looking for lower levels in gold. The head and shoulder top we've been talking about here in soybeans, and we did pick the high day in soybeans as well. I can't help it. If there's a red on top, we did it. If there's a green on bottom, which I don't see on this chart, we did it, but we didn't do it on this one, soybeans. Lately, this is a great sell signal. If this head and shoulder top works, we're going to be breaking below this neckline in a few days. Maybe by the end of this week. Kind of doubt it. Looks like sometime next week. And that's going to push it down to probably 1408. Looks like a very good ballpark objective. I haven't measured it exactly. I will later. Next chart, heating oil. Yeah, we picked the top of the move exactly to the day, January 24th. Come on, this is for real. I've been making these recordings for many months now, and I talk about these reversals the day they happen. So there's no BS in here. We also got an extremely profound high back in June. And there's a few other great trades too. There's a good buy here. Next chart. Wait a minute. I'm looking for a downside breakout here. This could be horribly profound on heating oil. If we start closing down around 2.27 and lower, that is an extremely long-term 10-month, give or take, bearish breakout, a whopper of a top formation. And the ER picked the first high exactly to the day, and the second high we missed by 2 days. It got pretty close price-wise for the high of the reversal day, but we don't sell the high of the reversal day. We wait until it has a reversal, and then we start to get in a couple of different ways. So next chart, crude oil. Great short sale signal a couple of weeks ago, almost on the top, very close. We got oversold a couple of days ago, and this bounce, I think, is close to finishing. I'm probably expecting to see weakness start to come into this market and start to make lower lows again. We have already made new lows for many months. So this long-term bear market, which we did pick the second high, not the first one, but the second high at the very beginning of this big, huge decline, some of these buy and sell signals that we come up with this trading strategy end up being many, many months to the next major turner, top or bottom. Next, the E-mini. Of course, October 13th, we picked up the low. We have an upside breakout of the head and shoulder top, and it's slightly different than the SPY because of when the markets are open. So rally high, for instance, in the off hours, if you will, on December 13th was a stronger rally than you will see, which I think it was 410 and 410.49, I think, exactly, on that day for the spider. But overnight, this got a little stronger. So the neckline slants downwards a little bit less angle. We bounced off of the neckline on the E-mini perfectly yesterday and the day before extremely closely. So this little dip we've got right now doesn't seem to bother me. A little nervous. I would not like to see it close below the neckline. That's yesterday's low. And that will change the picture, maybe profoundly. So we'll have to see how that develops. I am expecting, obviously, the beginning of a rally very quickly, and around these prices are maybe just a hair lower. Next chart. Cocoa. Head and shoulder top, downward slanting neckline. First shoulder is a bearish engulfing ER sell signal. We didn't get one on the top, unfortunately. We do have a bearish engulfing right there on that date, January 17th, but it wasn't a ER sell signal, unfortunately. We came very close to it, but not quite. All right, so now we need to have lower lows very soon. The shoulder can't be built up too much on the right here, which it's starting to do, and I don't like that. We did have a higher high today for a few days, and now it looks like it's going to close lower, so that could be a minor reversal. It works. Mostly these are not very trustworthy. Next chart, 10-year notes, interest rate futures, bonds in 10 years. This is 10 years, very similar to bonds. Probably going to slip off, and not too quickly, down to around 112. We'll see what happens when it gets there. It could very well bottom out there. I think that interest rate futures are building long-term bottoms. And I'm just trying to get a handle on the particular formation, some very profound breakout levels, which now is going to be a move up to and above 116 and a quarter, say 116 and a third, maybe something in that ballpark. That would turn me very bullish for quite a while, but I think we're going to be bouncing around under that price level for a while. And for bonds, same kind of thing. This is the bond chart. No comment. At the moment, slightly bearish, but because it's such a profound market these days, and by the way, we did get a great sell signal on August 2nd. All right, so I think I'm running into charts that I don't really want to talk about too much, and that's it for today. Thank you very much. Have a profitable trading day. Thank you.